Record. Cool. Yeah, so again, guys, private call I do. This is, by the way, those of you that are on, this is the only time that I do, one-on-one time. Ron, I don't know if you see this, Ronald, but I never do coaching. I never do one-on-one stuff. So I enjoy this one-on-one time with you guys. So Ronald, I asked you last month's call, and then, by the way, you guys, I mean, you pay $100 for this, right? So I want to make sure it's super, super valuable, but I'm also not the guy to like shove slides down your throat. So you've got to ask me good questions. I'll give you data and share data with you guys and stuff that I'm learning. And that's how these operate. So, Ronald, you said you took some things away from last call. Give me an update where the business is over the last 30 days.
So within the last 30 days, I'm just putting in place some type of analytics, like what's being used more frequently within which pages and stuff like that, so I can start to calculate like the CAC and ARPU and all that stuff.
And where's the business right now? How much revenue is it doing?
I don't have that much revenue. I'm not sure if you remember, but I mentioned that I was part of the foundation.
Yep.
So I launched the software, and I've been funding. I didn't do the traditional foundation like 10 paying customer stuff. I did get some paying customers, but I only got 5, and I
Yep.
funded it myself just because I didn't want to wait long. And I've been using like my day job to pay for development and everything. So right now is where I'm gonna do like a relaunch, and I only have 5 paying customers at the time, but I'm looking to scale that as fast as possible.
Good. And Lewis, I've got you unmuted. Can you hear me?
Yes, sir.
Is it Lewis, by the way, or Luis?
Lewis is fine, or Lou.
Good. Lou. So Lou's going to be the hot seat today, guys. We were emailing back and forth just before this. But Lou, were you on the last call?
That's correct, yes.
Yeah, so tell me, any updates, any big takeaways from that? How's business?
Yeah, for sure. What we did is we added in some of the metrics that you went over, the gross revenue churn, the net revenue churn. We're working on upsell, MRR, and revenue loss, which we weren't reporting on before, but I see the value in that, so we added that into our metrics, and we're now reporting on it.
That's good. I'm going to also share my screen with you guys real quick. I put out additional data, and I'm going to leave you two unmuted. Ronald, Luis, you both can hear me clearly, correct?
Yes.
All right. So I put out additional data that I hadn't included before at nathanlatka.com/SaaS companies. You guys are going to see, if you open up the article, you'll see here that I've got people ranked based off monthly recurring revenue, based off negative monthly churn club. Luis, you remember what negative monthly churn is?
That's right, yeah. That's we don't have that metric yet, but I'm working on putting that together.
Okay, good. So I've got that here, and then I've got some other, and I've described, by the way, the importance of that in some of these graphics, but I also put LTV to CAC ratios. So inspired beats is number 1, meaning for every dollar they spend on customer acquisition cost, they get $807 in return. Ronald, that's a good ATM, isn't it?
Absolutely.
So study these guys, and don't just look at my data. Actually go to their websites and try and figure out what they're doing. And all of these people are on my podcast. So if you want to find and listen to their podcast episode, just Google search Inspired Beats, Nathan Latka podcast. But I also did top 5 revenue per employee. Guys, I think we talked about on this on the last call, right, as a measure of profitability.
Yes, but I don't remember you mentioning like the actual companies like Seamless Doc or anything.
So Seamless Doc right now is up at the top at $960K in annual revenue per employee. Then Fileboard, Inspired Beats, ClickFunnels with Russell Brunson at $626,000. Prosper works at $358,000 in annual revenue per employee. So the reason I like thinking about terms in the terms of annual revenue per employee, you start thinking, okay, well, if Seamless Docs is making almost $1 million per employee, that employee has salary of, say, 150K. Their desk and their rent and their food and their expenses for that employee is 50K, so call it 200K. So their actual profit per employee is, say, 850K. So that's the ultimate metric, is profit per employee. It basically is a measurement of how efficient you are with human capital. Lewis, do you agree?
Yeah, absolutely.
So what's the actual like dollar importance as to why we would want to know like per employee?
Well, because do you guys ever go to those networking events like with founders, and the first questions we'll ask you is like, hey, like, how's business, or how big's your team, right? I hate that question because someone could say, I have 10,000 employees, and I'm going to go, great. So how much money are you making? In other words, there's a lot of companies that have a ton of employees that are broke as hell. They're not making any money because they've raised capital or they're just burning cash. I would much prefer to have no employees and be making $1 million per year than have 10,000 employees losing $1 million per year total. Do you know what I mean?
Yeah, absolutely. Okay, that makes a lot of sense.
Yeah, so that's the importance. Where are you guys at, Lewis? How many employees do you have?
We have about 60. We have 30 full-time and about 20 to 30 part-time.
Okay, and can you kind of back into your revenue per employee here on the call? Where are you guys at?
Wouldn't be very good right now. We're not profitable.
Okay, so you'd be like, what? But are we? How negative are you?
Ooh, well, millions of dollars in burn per month. I mean, we
In
raised
cash burn
about
or top line burn?
that's fine.
Cash burn?
Yeah.
Okay. Yeah. Now that's I mean, part of that's to be expected when you raise capital. I get, obviously the risk is, and we did that at Hale, right? Once you raise capital, you're gonna have negative cash burn because you have to spend more than what you make. That's why you raised capital. The trick where I see a lot of people get in trouble is they'll raise all this capital and then they don't cut costs if things aren't working, right? You know what I mean, Lewis?
Yeah, that's pretty much what happened. So you can look at, we're a small publicly traded company. You can look at the history of the raised about 12 million, and then things didn't work out as planned, and now costs have been cut. It's on the OTC. It's SXPC. S is in Sam, E is in Sam, E is in Peter, C is in Connie.
Got it. So 12 million was raised when you went public.
Well, the company was already public, so it was a reverse merger with the company we have now, which is SMS Masterminds. And the product was a prepaid card for kids. Think of like a Visa card that you could give to your kids and put budgets on it and track their spending. That thing has been wound down, and then we've revised the whole business to focus on text message marketing and marketing technology. So a complete 180.
Yep. Yeah. So I mean, the trick in terms of you go. Oh, and you said you're on the OPC or something.
Yeah, OTC.
And then the trick, like part of the trick to this is also understanding a metric that funded companies look at is something called runway. Lewis, are you in the executive kind of ranks at the company? Are you looking at runway?
We do. The challenge is not a lot of experienced executive and board members with SaaS, and that's the new direction we're heading in. So there's a lot of growing pains.
You do or do not have board members that are familiar?
We do not. Sorry, we do not.
Got it.
We have a board from the old company, which was prepaid cards and finance. So these guys are all in the fintech, and they're smart with that. But when it comes to SaaS, unfortunately, there's not a lot of experience there.
Yeah. Let me show you guys. This is information you're never going to see me put in a blog post. You will never see me email it out. It's one of the reasons I like doing these calls where people pay to be on them, because I can kind of do stuff like this. This is the actual board deck, Lewis, that I used at Heyo. This was our January 12th board meeting. I don't know what year it was, but you're going to see. Okay, so it's 24. This was back in 2014. I have all these board decks. But one of the things you see here, and this is obviously real data. So, right, we had approximately 1.45 million in the bank, which beat the 1.3 million projection. Let me see here. We always had a financial slide in here that had burn. Let me find it. Hold on. By the way, Ronald, if you have any questions, man, just jump in and cut me off, right?
Yeah, sure.
Yeah, so this was actually our summary financials for a particular period. So let's see. This is when we were still scaling. So the green bar here, can you guys read this number where my cursor is? What's that say?
I can't really see it.
Okay, let me see if I can make it bigger here. So this green bar here is revenue. So we were doing 61,000 in monthly recurring revenue. Okay. This was obviously before we scaled up to about past 90 and past 100, but 60K in revenue. We had the green line is cash in the bank. So we had 1.8 million, right, in the bank. And basically what you would do to calculate burn for us is you'd extrapolate this green line down to when it hits zero. So we were always operating where we were only losing this little red bar in cash burn per month, right? That's what that little red bar means. And it was usually less than, it was usually a pretty small amount, right? Oops, that was wrong actually, sorry. Net income loss, so the teal bar, right, is what we were losing per month, right? So here, this month was our worst in terms of cash burn. We lost over 100K. That's why the cash went from 1.7 million to 1.6 million. Right, so the teal negative is subtracted from the green bar going down, and ultimately, what I tried to manage the business in is I always wanted 12 to 24 months of runway. Does that make sense?
Right.
This is a lot of information, Ronald. What questions do you have about it? Anything?
Well, yeah. So the green bar is the amount of money you were spending, correct?
The green bar is revenue that month. The green line is cash in the
Okay.
bank.
Okay, got it. And then the teal line is how much money you were spending monthly to operate.
No, operating costs, total SG&A, okay, that is the orange bar. Net
Okay.
income or loss is the teal bar, and EBITDA is the purple bar.
Okay.
Does that make sense?
Yes.
So, Ronald, if you understand this, you should be able to answer this question. What happened right here? Why did the green bar go up, the green line go up so high?
You guys had a lot of money in the bank. You must have gotten an investment or
Yep.
cash flow.
That was when we raised $2 million.
Okay.
Yep. So this is one thing, guys, that you're not going to see in these info product courses and stuff, but real business people, they look at this stuff hardcore. I study this stuff every day. You know, Lewis, do you have this kind of stuff for your business?
Not as well organized as you have here now.
Yeah, you have to, though. I mean, to some degree, because you're a publicly traded company.
We do. Unfortunately, it's not well articulated through the team, and other than what we post on our filings, it's
Yep.
unfortunately it's not something we look at closely as we should be.
Yeah, yeah. Do you have any questions about this?
No, I mean it makes sense. I see what you're doing.
Is there some type of formula that you guys use where you just punch in the numbers and then it spits this out, or do you guys actually track, or how are you tracking all this information?
I paid a CFO. His name was
Okay.
Nathan1473268009. So once we got past about 50K in monthly recurring revenue, so once this green bar got above 50K, I hired someone to start doing this for me every month. So he would have an Excel sheet, and I'm happy to show you that. It's extremely complex, but he would handle all of this. He'd send it to me. I would review it, right? We'd get some cash guidance to do, right? And then I would use this guidance to manage the board meetings. And also, if I had questions about it, I would obviously ask them about it. So you can see here, this was our team, like our org chart, which allowed me to calculate, here's me, CEO, right? Got my board of directors, which obviously I had 3 seats on, my key people. This person right here was basically my right-hand guy with anything financial. His name was Jonathan, and he handled all this reporting.
Okay.
And I paid him $3,000 a month. So, when you do the math, I paid him almost at the time, what would that have been? About 4% of total monthly revenue I paid just to do tracking.
Right. I mean, but that's what you needed to scale to the next level.
You have to things don't improve unless they're measured. So you have to measure stuff.
Right.
Yeah.
Would you be willing to share this deck you have here?
Say that again?
Would you be willing to share your deck here? This is a great example to follow.
Yeah, I won't. I'll share it here live, but I won't send it out publicly. You can see. I mean, I can. Are you guys interested in kind of how I formulated board decks?
Yes, I am.
Luis, are you?
Yeah.
Okay. Yeah. So the key thing with board meetings, that you can really get a good sense of a business based off just listening to an investor call or board meeting. If the board members are asking the CEO questions, the business is in trouble. If the CEO is asking the other board members questions, the business is usually doing well. So the trick with a good board deck, is to make sure you're reporting out information, but also leaving sections of the meeting open to ask the other board members questions. You should think of the other board members like employees almost. So whenever I was crafting these decks, I'd make little notes and say, on this slide, ask, board member 1 how he managed cash flow in his last company, right? If I didn't fill the time with questions, good questions to ask other board members, they would fill it grilling me, right? Which is not a good thing. Does that make sense?
Right.
Yes, makes a lot of
Yeah,
sense.
this is very much like a play. And by the way, I mean, I think I just read this morning on Yahoo Finance that Bill Ackman bought 9% or 9.9% Chipotle, right? So Chipotle's board right now is going through, crap. How do we deal with this new active investor? And what Ackman's play, or Icon, or any of these activist investors, they can attack public markets like this because what they do is they buy a large chunk of stock, via Vanguard or whatever, their broker on the public market. They then can essentially force management. I'll show you why. Hold on. Come on. Okay, so one of the things I like to do, go to Yahoo Finance, go in here, look at holders. Okay, and what you're going to see is that many, many times, let me close all these tabs. Okay. Can you guys still see my screen?
Yes.
Okay. Many, many times, holders, you see here where it says shares held by all insiders?
Yes.
So only 1.5% of the business is held by the team, the managing team. So what that means is when someone like Ackman comes in and buys 9% of the business, you can go in here and look at the institutional holders and quickly realize, wow, at 9%, that makes Ackman and Pershing Square like the top shareholder, right? The highest here in the mutual funds is 4% with Fidelity. The top here in institutional is Vanguard, right? So and then these guys own like nothing, right? These are like these are no shares, right? So if 2.5 million shares is 8%, 154,000 shares is like very, very little, right? Less than 1%. So Pershing Square basically came in, bought 9%, and what you can do is force the board to either make changes that Ackman wants, which might include getting rid of the CEO, or the management can pay him green mail. Are you guys familiar with green mail?
No, I'm not.
Okay, Luis, what about you?
Would you green mail?
It's called green mail.
No, I haven't heard of that.
Okay, what green mail is, it's how in the 80s all the activist investors made all their money. Green mail is basically something Ackman or the board of the company, Chipotle, could say, hey, you know what, Ackman, we don't want to deal with you anymore. We'll pay you a premium on the current share price, which is it's at 436 right now. We'll pay you $500 a share to buy all your shares back, right? But they're only buying Ackman shares. That pisses off the other shareholders because remember, there's millions of. I could own some Chipotle stock. I'm not getting a $500 price. I have a $436 price. So Ackman could force something called green mail. If he's a big pain in the ass for the management, and the management really wants to hold their position, management could pay Ackman $500 per share, which is a serious premium of about 110% over current market price. And then boom, Ackman exits his position, which he only purchased at $436 a share. Does that make sense?
Right.
So they just get rid of him, and then he makes all the profit for buying it.
Exactly. Now, he doesn't necessarily want to do that, okay? So maybe he actually wants the company to make changes that's going to increase the value more than what the green mail share price of 500 would be. The thing is, though, if management doesn't pay him green mail, right? What Ackman could do is force something called a proxy war, which basically is him rallying up other shareholders so that he can then get board seats. Once Ackman gets board seats, he could do things like remove the current CEO. What you'll typically find is CEOs hate that because many times they have all these perks associated with being CEO of Chipotle. You get a jet, you get fancy cars, expenses, blah, 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 and they're protecting their fiefdom, right? So when Ackman threatens them like that, they sometimes, especially if they have cash on hand, really want to just pay green mail and get rid of them. Other times, a proxy contest will happen. Ackman will get board seats, and he'll put his own management in place. He'd hold on to his shares and actually try and build value in the company to 440, 450, 460, 470. Does that make sense?
Yes.
So you really have to manage. My point is, going back to my board deck, you have to really manage your board tightly.
Right.
Otherwise, you can lose control fast.
Got it.
Yeah. Lewis, what else? Tell me. One of you guys said that you said, "Hey, can you share your board deck? It's really interesting." What is interesting about it?
Well, what you just described is basically what happened here is our CEO was moved to another position, and then somebody else was promoted to the CEO place because of disagreements with the board and basically issues with the board. So it's been a roller coaster of ups and downs. And I think one of the things that you mentioned here is really interacting and treating your board like employees, to where you're getting value from them and you're explaining what you're doing, but asking for input. And that's something I don't think we've done very well.
Yep. Yeah. The worst thing you can do to a board is to show up and report numbers, right? Because
Right.
you're in a weak negotiation position. Hey, our cash is this, our growth is this, blah blah blah. Well, great. Like that makes you seem subservient to the board. You have to give them the information they want, ideally before the board meeting. I'd always email these board decks out
Right.
2 weeks in advance, right?
Right.
So I'd say,
Right.
I expect that you've reviewed this, and then I will pound them with questions, right? Hey, how can, in your last company, you guys had cash flow issues. How'd you deal with it so we can do it here? In your last company, you went from, 5 million in revenue to 20 million in revenue. How'd you do it? How can we do that, right? How many are my employees, my org chart, right? All that stuff.
Yeah.
Go ahead, Ronald. What were you saying?
Oh no, I just said it right.
Okay, good. Lewis, what were you saying?
I think that makes a lot of sense. That's something that we've been improving on, and we've got to continue improving on to really engage and interact with the board to make sure they're adding value.
Yep. Well, good. Well, hey, in about 5 minutes, Lewis, I want to put you kind of on the hot seat. We'll go deeper into some of your stuff. But I've done a bunch of talking and kind of showing you guys stuff. Any questions you guys have for me about maybe stuff you saw me do over the past 30 days and you're wondering how'd I do it or why'd I do it?
Yeah, I actually have some questions on your latest acquisition on SendMail, right?
Yep. Send later. Yep.
Later. Just received yesterday or the day before an email of your journey on how you're going to proceed and make that a $1 billion company.
Was that my income report, the July income report?
Yeah, I believe so. Yeah, the July income report.
Yep.
So I see that you guys
this one, right? This article.
I read it on my phone. I'm not sure.
Oh, okay.
Yeah. So yeah, I think that's the one though. I see that you guys are still haven't figured out yet the actual pricing on what you're gonna charge for what services, and you're gonna start measuring what the usage of certain things. So then, based off of the value, you're gonna charge accordingly, right?
That's correct.
So what determines, like, how do you base your initial price if the market, for example, your competitors aren't at the same price point as you? So how do you guys go about just asking the question to the customer, or is it like a more strategic, in-depth thing that you do?
So it's a combination, right? Part of, and I'm kind of using my screen here as well, but part of this is art and part of it is science, right? I'm using customer data and actually watching how they're using the tool to influence my pricing. I'm also looking at the market. So Boomerang, for example, which is a competitor to the tool I acquired, offers 10 free credits, and then you have to pay $5 a month, right? Let me show you guys on my screen. Hold on.
Yeah, I'm familiar with Boomerang.
Lewis, do you use any tools like this?
We're using a program now called Banana Tag,
Yep.
and it does email tracking and simple stuff. I don't think it does some of the features that you have with Send Later.
Yep. No, I know Banana Tag is a competitor in the space as well. Smart guys. So let's look at both Boomerang and Banana Tag. So you can see here pricing, okay, on Banana Tag for monthly. Okay, you get 5 emails, kind of tags per day, okay, for free. Okay, you get basic notifications, okay, and no reporting. For $12, you go up to 100 emails, full metrics, reporting, blah 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 blah, right? And then in $25 per user per month, you get team stuff. So basically, their max on the free is 5, right? On Boomerangs, they're free. Lewis, can you see here? It says 10 per month. Can you see that clearly?
Yeah.
Okay. So what I did is I said, you know what? I want to be the cheapest, right? So we're doing 5 per month, right? Sorry, we're doing 50 per month in free credits. Okay, nobody else offers that many free credits. Now the reason that's important, okay, so again, 5 here on Banana Tag, 10 here on Boomerang. The reason I'm doing that is because you want those free users. They're basically going to be our marketing channel. And the reason is because eventually what I'm going to do is every time somebody uses Send Later, right, and you can see here on my screen right now it has almost 30,000 users, it will say sent with Send Later, right? People will then click through those links and it will lead to automatic viral growth. Does that make sense?
Yes.
So a lot of companies, like Lou, do you guys have any kind of viral coefficient stuff or like growth hacking stuff that you do in the business?
That's what well, that was going to be my next question, right? For me, it's just bail binder. It's a software automation tool for bail bondsmen um, to manage their paperwork. So with that said, how would I like? They don't deal with other bail bondsmen. It's like a real cutthroat business. So
This is Ronald,
they're
right?
yes,
Yeah,
wrong.
yeah.
So they want to keep all the business to themselves because another bail bondsman could come along and use and take their client. Right? So how would in that situation, what would be the best approach in terms of creating some viral growth within that market?
Yeah, so let me come back to that in a second. Lewis, are you guys doing anything that is basically product marketing or growth hacking to get more customers?
We do a lot of marketing automation, a lot of pay-per-click. We do partnerships, we have affiliate, but primarily everything we do is paid. We don't have any real viral components or anything that you can make money on without spending money.
Yep. So let me first show you guys how kind of viral coefficient works. I'm talking how do you turn 1 user into 5 users, not with paid marketing, nothing like that. So this is the equation. Okay, I'm going to show this on my screen right now. Let me see. David Scott does a good job explaining it. Well, I'll just tell it to you guys because I know it in my head. But basically what you're going to do is these coefficients make up oh, here it is. These coefficients make it up. So K is the viral coefficient. And K is equal to I, which is the number of invites sent out, right, to each new user, times the conversion rate. So let me give you an example of Send Later, right? My viral coefficient is going to be equal to how many people or how many invites one new user of Send Later sends out. So let's say 100 times how many of those 100 become new users. So maybe 10%, right? So what I'm thinking is once I get somebody to add Send Later and start using it, how do I get them to send invites, right, to other people to get them using it? And if they send 100 invites, how many of those people will convert into a new paid plan? And then the cycle rents, washes, and repeats. Guys, before I go forward, does the formula make sense?
Yes.
Okay. So there's two critical factors here. The first is, how do you get them to invite other people? So have you guys ever wondered why you see a lot of enterprise businesses saying, hey, you add your team members, like Basecamp does it, Slack does it, Trello does it. You know what they're doing there, right?
They're getting additional free users.
Exactly. It's the quickest way, right, to grow business usage, right? And so one of the things, I'm going to take you guys into my Stripe back end here. You'll see in my August income report is I signed up this lady for Send Later. And obviously, guys, this is all confidential, okay? Can you see here? Can you guys read? What's this charge for?
$150.
Okay, now I'm only charging $5 per month for Send Later. So what happened?
You added her team.
Yeah, she bought 30 seats. Okay. So what happened is this lady, okay, basically said, hey, Nathan, I'm loving Send Later. And I could tell she was loving it because when I go to my admin dashboard that I showed you guys on the last month's call, I saw that she was one of these people where, so do you guys see here? It's kind of cool. Can you guys read this email here? What's the domain name?
Groupon.
Right? That's amazing. So this, and what's this one? Look at this.
Uber. Right.
So I have Uber. I have Groupon using me. When I see that kind of stuff come through my usage feed, and I can then go on LinkedIn and, oh, I'm not logged in. And I know Uber has, thousands of employees, so does Groupon. This person becomes my point. Like, I essentially landed Groupon. Now I need to get this person to invite 3 other Groupon employees, then 3 to 10, then 10 to 100. Before you know it, I'm closing a $5,000 per month annual contract with Groupon. Does that make sense?
Yes.
So that's the key. That's basically what happened here at a micro level with this $150 customer, right? $150 per month, okay, multiplied by 12 months. What is that? That's 1,800. That's $1,800 a year, right? Just like that. And so that's what's important. That's why it's so important to think about viral coefficients. And it sounds like, Lewis, it sounds like you guys really don't have that yet. You're just doing a lot of paid stuff, right?
That's right. It just sparked an idea. We do a lot of text message sending. That's our primary form of communication. And the challenge is the limited number of characters you have. But you can always squeeze in a link in the message that we send out to our trainers on our products. So the way we've done in the past, though, is through affiliates. So we'd send out a link for them to share an affiliate link, and then they earn a commission on the monthly charge. Are you providing an affiliate, or is it simply just a referral-based link?
People mistake affiliate programs and referral programs with viral marketing, and it's not, because you pay the affiliate a commission, right? All you're doing is moving your costs around. Instead of spending $10 on the click from Facebook, which is going to get you a customer, you're just paying the affiliate $10 after they bring you a customer, right? Same cost, just different model. Viral coefficients in product marketing, you want to think about, how do I turn my current user base into a free marketing force organically for me, right? So this is now what we're testing for Send Later. I'm gonna write a new email here. Obviously, I have the plugin turned on. I want you guys to read what's at the bottom of this email. What's it say here?
Let's start later.
Okay, for Gmail. All right. When somebody clicks that, where are they gonna go?
So the plugin page.
Exactly. Right. So now any free user, and by the way, about how many emails are we sending per 30 days? What's this number I have highlighted?
26,290.
Okay, so, and again, we have less than 60 paid customers, so about 26,000 emails have that link at the bottom of it. Yes or no? Do you think that's going to drive some free growth?
Yeah, absolutely.
100%. Right now, you're going to go, Nathan. Well, how do you quantify that? Well, let me show you. That link in this email. See how it's a short link? nathanlatka.com/send later. I set that up using a WordPress plugin called Pretty Link. And I will show you the exact data of how many clicks that link has driven. So here's the link. How many unique clicks has that driven?
What's that? 1 million?
How many unique clicks, guys, has that driven?
Oh, 900.
900.
You got it. 946. That's free. So assume 1,000 clicks here, right? Let's assume just 5% install the plugin. Again, that's how you start thinking about, okay, that's like 1,000 invites being sent out for the viral coefficient. It's like 1,000 invites being sent out, right? 1,000 invites, that's what I is, times your conversion rate of 5%, right? So that's 50 new customers, okay, or 50 new users from that, from just that one little growth tactic, right?
Well, let me throw you a curveball here. I'm curious, how would you multiply this if you were a B2B company, and let's say you were selling this product to businesses, and then they were communicating with their clients? You know, how would that change the dynamic of this? Because it makes sense if you're just a regular person, you could use it then later, right? But if you're a business using a business product, the regular end user isn't going to be, you know, interested in the product.
So
Yeah, so that's the same position I'm in. So
okay, good question. So if I was running this tool and I was selling it in the B2B space, there's two ways I can make more money. I can get that same business customer to pay me more by adding more seats, or I can get that same business customer to tell their other clients or other businesses about my tool, right? Are you both with me?
yes.
So we already talked about how to expand the one business client, get them to add seats, add additional features. The most famous example of viral coefficients in the B2B space is our document signing companies. Okay, when you go in, I'm going to go into my DocuSign account. So I want you to think about how you could use this in your business, all right? And I'll give you some ideas after I show you the real life example. If I can remember what my email password is. Beautiful. Okay, get signatures, sign a document. Right, upload. I'm going to upload some random thing here. It's just a screenshot, but let's say this was actually a Word doc that I'm signing, right? I'm going to sign this with DocuSend. Signature. Let's say this was the signature line right there. Boom, done. Okay. So, why isn't this letting me finish? Perfect. I'll finish it. Look at what this says here. Can you guys read this?
Yes.
Send your signed document to anyone you would like. What is this? Now, this is a brilliant job. This is the viral marketing. It's built into the product experience, right? And that's why these work so well, right? So hey, Nathan, you signed. Who else do you want to sign? Do you see what I mean? Is this making sense?
I mean, I see what you're saying, but I don't see the what's their value in this situation.
Whose value?
DocuSign.
DocuSign is saying, hey, Nathan, you just signed a document. We'll quickly send this to the other person who you need to sign it. Who do you want me to send it to?
Okay, got it.
It's saving me from having to download the document, go into Gmail, write a new email, send it to them, and have them sign it.
Yeah.
But what do you think happens when I do that? If I put in the other person signing and I put it in here, what are they going to do?
They're gonna send it and say sign with DocuSign.
Yeah, exactly. Create a DocuSign account and sign up. Right? That's viral coefficient. So let's do this for each of your guys' businesses. So Ronald, describe your business again to me.
So it's a automation software for bail bondsmen. So what they do is they upload their paperwork that they would fill out manually to the software, and then I use HelloSign I use HelloSign's API, and they fill the application, the paper application, which is uploaded to Bailbinder. They fill it with their client, or they can send it to their client and fill it, and it'll automatically generate a profile for reporting and their insurance compliance.
Okay, and how do you make money?
So I charge them
The bail
monthly.
bond?
Yeah, the bail bondsman, right, per client.
Okay, and do you charge them, like, what if one of these bail people have 7 of their team members using it? Do you charge based off team members? Like, how do you get more money from the same client?
So I don't charge per team member. I give them unlimited amount of team members. I charge per bond. So for example, each signature would equal a bond. So I limit the amount of bonds they can use monthly.
Okay, and when these bail bond people, when they send these contracts, it sounds like they're like templates, right?
Right.
And do they ever create new templates?
Well, yes, but they have limits on that too. So, for example, one company might have 3 contracts, for example, that they would need to create a template for. That's about it.
So
So they would use the same template over and over.
okay, so you make more money when the bonds people are getting need more signatures in any given month, or when you add a brand new bail bondsman. Is that right?
Right.
Okay, great. So what you should think about is how do you use your current bail bondsman to invite somehow other bail bondsmen across the country. One way to do that is say, hey, is there anyone you want to share this template with? Right? Let's say the template that has a really high signature rate or is really valuable or something like that. You could say, put in the name and email of your colleague in California or somewhere else who you want to share this with, right? Now, maybe that'll work, maybe that wouldn't. But do you understand kind of the mind frame you need to get your head in order to think about this?
Yes. I see what you're saying. I mean, I'm not sure if that right there would specifically work, but I understand the mindset.
Yeah. Yeah, and part of it is just because I'm not actually in your business. But think about ways that bail bondsmen talk to each other, and figure out how to get your product in that conversation. Which conferences are they going to? When they talk to each other and they share do they share templates? I don't know what they talk about, right? But figure out how to insert yourself in that conversation. That's probably your best growth tactic.
Okay. So they all the only thing that I could probably think of off bat is that they all deal with the same surety companies. There's like 12 surety companies in the country that they all deal with that back their bonds. So if I can somehow get myself in with them, they're the ones communicating with all the bail bonds within the country,
Yep.
and maybe possibly giving them some type of free trial or a very discounted rate for what they're doing, and include their template so they can send out.
Who are the people that are signing these contracts the bail bondsmen are sending out?
The customers, well, the people coming and getting out of jail.
Okay, so you're not making any money off those people, right?
No.
Yeah, they probably don't have money.
That's why I have
Yeah. Okay, good. Lewis, let's do this for you. So you guys have tested a bunch of stuff. I mean, the most obvious one is put sent with your company at the bottom of every text, but it takes up valuable characters.
That's right. So we would have to. The challenge is we're sending to the end user, much like the bail bondsman example. Is we'd have to figure out a way to monetize revenue from an end user, and that might be in cross-pollinating and trying to have them sign up for different services and so forth. But right now we don't have a monetization of the end user, so sending them something with a link doesn't give us great value.
Well, be careful because DocuSign could have said the same thing, right? DocuSign could say, I only sell to Nathan. He's the business owner that needs a contract signed, okay, right? DocuSign could have said, anyone Nathan is trying to get to sign a contract, they're the end user. They're not going to be a potential customer, right? That would be a big mistake, right? You're assuming that the end customers are not potential clients for you, but what you realize, those end customers, they all have a job somewhere. They all work somewhere, right? They all tell their colleagues at lunch about tools they used, right? That actually potentially is a channel for you guys, right?
Not specifically. So just to give you a little background, the product's called Off Day Trainer, and we're a marketing platform for gyms and personal trainers. It's a huge industry, health and wellness.
Yep.
So the end user is not a business owner or a trainer in that space. They're seeking the help of a trainer or going to a gym to work out. And I'm just not sure. Some of them might be, but it's very unlikely.
Well, think about, again, same thing that I told Ronald. When do these gym owners talk to each other, and what do they talk about, and what do they share when they do that, and how can you insert your product in that conversation?
Yeah, absolutely. We've done expos and we've signed up on groups, and we've sponsored different types of athletes in the space and trainers and gym owners. I'll need to think a little bit more about how we might be able to implement this viral coefficient. I love the idea of it. Just scratching my head figuring out how it would work.
Yeah, this is not easy. This requires a lot of creativity, but put the constraint on your head. Assume you have no money, that you can sponsor stuff, you can't throw money at this problem. How do you creatively engineer your product like DocuSign has, and like we're doing at Send Later, so that one user
Hmm.
almost magically turns into 5 users? That's the key.
Well, I look at ClickFunnels, for instance. I know you had them on the show a while back, but what they did is they did affiliate program, right? So they have their little badge at the bottom of
No,
every site. And you
yeah,
got a great affiliate, and
that's not always an
that's what my mind
that's
goes.
not always an affiliate program though, right? So every free user that signs up for ClickFunnels, whether you're an affiliate or not, when you create, like, let me see if I have one. Uh, I think this is ClickFunnels. Yeah, I pay so you don't see it. They put that badge on it. Webinar Jam does the
Little
same thing. Yeah, a badge is a great way to do it. That's not always an affiliate though. Usually it's not actually. Does that make sense?
right. Yeah.
Okay, cool. Luis, I asked Ronald, what questions he had. He fired a few at me. Let's go over to your side real quick. We talked a little bit kind of about doing more of a hot seat with you. We have 9-10 minutes left, so let's dig in. Where's your head at?
Yeah. So if you want to bring up the website, it's called offdaytrainer.com. And it's a pretty interesting space we're in. So we're in the cross section of text messaging, we have digital signage, and then we have marketing automation. So between those three things, what we do is we help gyms and personal trainers connect and motivate their clients to achieve results. The interesting thing about our population here in America is 70% of us are overweight or obese. So our mission is to help reduce America's epidemic in obesity. And to do that, we help empower trainers to share and motivate their advice with their clients. That's really what we developed the platform for, is we realized that many of the clients that would go to a gym, or a member that goes to a gym, they work out and have a great workout for that 1 hour, and the next day they fall off the leg, and next thing they're not eating right, they're not working, they're not running, and our system helps communicate and keep them motivated. We actually have a patent on it, which is pretty cool.
Okay, I understand
And,
the product. Let's talk about the behind the scenes.
cool. So here's what we're marketing it with now is we've started with partnering with a guy called Todd Durkin, and he is one of the leaders in the trading field, and he helped us onboard a few that's in there. So he helped us onboard a few of his masterminds and a few of his trainers in his network, and we've used that testimonial on Facebook and Instagram, and we've gotten some really good success. We're at a 5-to-1 LTV CAC on some campaigns, and that has recently down as we've used and basically just overloaded the marketing with that particular video. So that's one thing. And Facebook and Instagram are the other two ways that we were getting content.
So use this time. Don't tell me what you're doing. Use this time to ask me where you're stuck. I'm glad all this stuff is working for you, but where can I help?
Well, that's where we're stuck. So we had some good results initially with Facebook with that video, and then things have recently dropped off as far as our cost per click and then conversions. Seems like we just got ad fatigue on that, and we're trying to figure out how to pivot from there.
Okay, I am not going to be very helpful in helping you figure out how to get cheaper cost per clicks because I don't have a lot of experience doing. I like free users, right? I don't like paying for new users. But one thing I will tell you can do, because I've done this with a few people that are like Send Later. Anytime you see a sponsored post, you can go up here and so let's say you see one from one of your competitors and click "Why am I seeing this?" and it will tell you the targeting they're using, right? So Inbound wants to reach people ages 18 and older, right? And they're doing it location-based, who live in Austin, Texas, right? You can do this on any of your competitors' ads. Does that make sense?
Yeah, that's a great tip.
Yeah, that's just a very quick tip that will give you ideas of other targeting groups that you could use. Like here's let's say I was competing with Flixel and I wanted to see who they were sending ads to. I'd say, why am I seeing this? You're seeing this because they want to visit people who visited their website. Okay, so they're doing a retargeting or one of their apps, right?
Right.
They also only want to see people ages 24 to 55 who live or were recently near New York, right? So that's a quick way to kind of steal kind of competitors' targeting data.
So what's your strategy with send later then? You're not going to be implementing any paid campaigns?
No, I mean, one of our weak spots at Heyo, and the reason you saw that board deck where cash was going down is once we got cash, we lost our creativity because our answer to everything was throw money at it, spend more money, right? Seriously, I mean, why? It's the easy way out. Why would you not, right?
Mm-hmm.
So what I'm forcing myself to do at Send Later is say, if I have no money, how would I get new users? And those are the things that I'm doing. Like, for example, let me show you guys this data because I thought it was pretty impressive. Can you still see my screen?
Yes.
Yeah.
All right. So this is the back end data for my blog, nathanlatka.com. Okay. So yesterday, Ronald, you saw the income report, right?
Yes.
So here's the data from yesterday. Can you read this number? How many views did that report get just yesterday?
1,754.
Yep. In one day. Yeah, a lot of people would love to get 1,000 unique website views per month, right? For free, right? This is all for free. Okay, so yesterday altogether I got, what's that number? 2,566 views to the website, right? And today is high as well. Well, built into that article, okay, I want you guys to see this because it's important. Built in that article, okay, what's the first link?
FreshBooks.
Okay, why do you think I did that?
Because it's a known brand.
Look, I love known brands, but Nathan doesn't do stuff for free. You guys know that, right? You're paying for this.
Gotta be affiliate or something.
Of course. I thought that too. You have a couple of other affiliate links there.
Yeah, so FreshBooks is a sponsor, right? I use them aggressively myself, right? That's how they became a sponsor. So they sponsor my podcast, right? They're one of the podcast sponsors. And so I'll show you. This is actually funny. What you're about to see is me. Let me see if I can find it. Me invoicing FreshBooks using FreshBooks. How about that?
There you go. That's eating your own dog food, huh?
Yeah. So see, they're a podcast sponsor. They pay me $12,000, right? And this is monthly. Okay. So they get the podcast sponsorship, but I'm also quote unquote getting paid, right, by putting them up here, right? I want them to like look good, right? See, everything that I do, you guys are going to learn this as we spend more and more months together. It's very strategic. Like it has intention, but the intention is always very good, right? I wouldn't put FreshBooks here if I didn't use them myself. I use them aggressively, right? So
what was your click-through rates to send later with that post, the 1,700 views? Are you tracking the click-throughs, the send laters, and the sign-ups?
I am. So the next big link is why I acquired Send Later. Well, what I did is I went in here. Okay, the Send Later is a pretty link. That's the plugin, the WordPress plugin that I used. Okay, when I go to this data based on a daily basis, what you'll see is a large spike yesterday by about almost 1,000% increase.
And that was from that one article, or is that from all links?
Nope, it's just from this link I'm showing you now is just from that one article. Right, so see here, usually I'm getting kind of organically 11, 12 to 4 clicks per day. Yesterday it was 103. Right, and that's like qualified traffic. That's not like cold CPC traffic. That's people that read the article. They're all coming here to read for free, right? That's because people share it with their audience. I get new people coming in. Okay, I'm sending traffic back to other articles that build my brand, like the one on entrepreneur.com, like when I sold my last SaaS company, right, which is another piece on my website, right? Then directly to the Chrome
extension. Out of that spike in traffic, did you get conversions to the free sign up on Send Later?
I can't track all the way through there, but I'm assuming with people clicking through that's happening, and I can also look at the data here. So you see here, this is updated, and I'm getting like, it's like every second something is happening. That's like this feed is moving very fast.
Right.
Right.
So you don't have a new user sign up report that just shows you people signed up by day?
I do, but it's very manual.
Got
And if I go back in here, my developer dashboard, Chrome will give me some data, but it doesn't update
got it.
48 hours after, right? So send later for Gmail stats. So you can see here, this is the day before the article went live. It's kind of increasing. I expect this red line, which is installations, that will probably spike when I get to the
Mm.
next data point. Does that make sense?
Yeah.
So anywhere between at a low 24 and at a high 152 new people are installing send later every day, right? So that's somewhere between 600 and 4,500 people, new users per month, right? If I convert 5% of them to $5 per month users as a starting revenue point, you guys get to see kind of how this starts compounding very fast.
Yeah, yeah. So your idea for Sun Later is just to get as many people as you can and just convert a small percentage, but you're doing all this for free. I
Yeah,
mean, yeah, for little no advertising. So
correct.
then when you do, let's say, approach this or try to go to an investor or anything like that, you would have a lot of leverage.
Yeah, I mean, the point is like it's the cheapest marketing you can do is content marketing, and I have a shit ton of content. I mean, true or false, Ronald? You reading this? This was a really valuable piece of content, wasn't it?
Yes, yes, it actually was.
Right? So like, it just took my time to do it. But by writing it, I also learned a bunch. Right? It helps me learn how to articulate myself better. Right? Plus, there were other sponsors I was able to build in, like FreshBooks, so they also like it. Right? So I create like a win-win-win-win-win from this.
Okay.
Make sense?
Yes.
Cool. Cool. Um, so guys, let me listen. This is and I see 4 or 5 other folks jumped in. Sorry, I didn't get you guys unmuted, but I've got the recording, so we can do questions via email when I send the recording out. But guys, this is so this is only the second time I'm doing this. Lewis, Ronald, I think I told both you guys is I hate coaching because it takes up my time, and I just want to be in a corner executing, following. You guys can tell I'm a data guy, can't you?
Yes,
Oh yeah.
that's a good thing.
Data is all I care about, right? If I could be by myself with no humans on Earth the rest of my life and just live with my little computer and data, that's what I would do. Um, so this is the second time that I did this. You guys are paying $100 each month for this 1 hour call, right? And I'm always very, I don't need the money. I sold Heyo, did all that stuff. So I always do want your totally honest feedback. Ronald, where's your head at? Was this valuable stuff?
Yes, it was valuable stuff.
Okay, good, good. So you're happy paying the $100, or do you want a refund?
No, no refund right now.
Good. Lewis, what about you on your end?
Yeah, I'm good.
Good. How can I make these more valuable? We spent an hour together. How do I make them more valuable?
I think if because you obviously have a lot more experience in a lot more areas than we do. I think if maybe you would offer more actionable steps to our situation versus just only. Well, I mean, I find this very, very valuable too, analyzing other companies. But like, let's say us in the group here, possibly offering more actionable steps, ideas. That's it. I think
Yeah.
that would be a little bit more valuable.
Yeah, and Ronald, being honest with you, I don't know if I'll ever do that because that's like one-on-one coaching, right? In other words, if I have 5 people on this call and I have to take things that I'm doing, like I kind of did it with you guys because it's a small group, but if I have to start taking what I'm doing and actually prescribing it for each business, it's
Yeah,
basically one-on-one coaching. It doesn't scale, and I'm not interested in that. That people would pay, a grand, 10 grand, whatever for that. But I will try and, when it makes sense, kind of build that in. What I try and do, look, there's a lot of courses out there that will just prescribe you stuff. Say, Ronald, do this for your business. I really want this to be, if you guys want to, if you're watching me do stuff, right, from the public's perception, you're going, what the hell is Nathan thinking? I want this hour each month to be your portal to my brain where you will actually see why I'm doing stuff, how the money's flowing, that stuff. And hopefully you find stuff as I'm telling you that story that applies to your business. Does that make
yeah.
sense?
That's actually a lot more valuable too. But now that you said it out in the open, maybe we can prepare based off the content that you're putting up out there and see what we can ask you and
Well, I mean, are you guys like Lewis? Are you guys? I mean, I assume you guys are kind of a lot of people that get on these things. They are sometimes they want to be like me, or they're other marketers, or they're other software people, and they study what I'm doing publicly, but then they have questions like, why the hell is he doing that? And this call is the way for them to get that extra information they don't get anywhere else. I mean, are you guys like following what I'm doing on the blog or the Facebook or Snapchat or Instagram or and kind of trying to reverse analyze?
Yeah, I think the primary reason I started get involved with this is just listening to your podcast, reading your blogs. You obviously get SaaS, and that's an area I want to improve. So I figured, let's connect. I'm with a whole bunch of other groups. So yeah, I spent a lot of time and invested a lot of time, and I was hoping this would develop into something bigger with other SaaS people, and you just get a great dialogue going. You're uncovering a lot of secret tips and stuff, and that's going to add value to what I'm doing.
Good. Yeah, that's absolutely the vision, is to continue adding people, but I won't go above a certain number of people, which means eventually I'll actually having to tell people that unfortunately I have to remove them from this and refund them to keep the quality high. Otherwise we'll end up with a group with 10,000 people in it. You know what I mean?
Right.
I won't remove you
sure.
both. You two don't get removed. I like you both, so you won't, but that won't. Good. So Luis, you good, or do you want a refund?
I'm good, man. You're good.
Good. That's awesome. All right, guys. Well, hey, I'm gonna get back to work here in New York, cranking the data. I've got the recording, and I'll get to both of you guys. But listen, I'll get you the link for next month's chat as well. Let's keep just getting data and diving into this stuff that you're just not going to get anywhere else. Like today, you saw a board decks, which you Google Nathan like a board decks. I never blog about it, never podcast about it. That's my goal, is to give you guys access that you just can't get anywhere else. So, guys, I appreciate your time.
Hey, thanks a lot, man. Good stuff.
See you guys. Bye bye.
Hey, take care.
Thanks.